Hey there, everybody. Thomas Wood with Basecamp Trading. We're going to go ahead and take a look here today at the NASDAQ, and one of the setups from the futures trading room today that played out really well. And it's running, it was what we call around the stops. And this occurs, and we've talked about this previously, but it occurs when the market breaks through resistance or support and then turns around immediately and closes the opposite direction. Okay, so we saw that happen here in the NASDAQ very clearly on the 30-minute price chart. And if you were in the trading room, we talked about it. You remember we were discussing it as it was unfolding. Hey, watch, it's looking like it's running stops. Okay, it's closed down, so we expect it to head lower from here. And that was this move right here, right after the stock market opened. We shot straight up and then turned around and closed down. And when we shot higher, we actually broke through yesterday's pivot high resistance. And it broke through by a few ticks, and immediately after breaking through, turned around and came back down, and we closed down here on that 30-minute price bar, which means we expect it to accelerate lower from there, which is what that big 40 or 50-point sell-off was right after that price bar. Now, we obviously since then retraced, but you had the ability to make a very nice return or have a very nice trade on the way down coming off that round of stops. So one of the ways we use this, if you're not just straight up trading around the stops, is when we see something like this happen and we see it occurring on a longer time frame, like a 30-minute price chart, we can then use this as a bias for our shorter time frame charts, something like a Renko chart or a 2-minute price chart. We can time our entries with those shorter time frames within the context of the bias that was established on the 30 or 240-minute or daily time frame. And just keep in mind, the bigger the time frame we're looking at, the bigger the expected move when it does trigger. Okay, so watch for this. Again, when you break through a pivot high or low and then immediately turn around and close in the opposite direction, oftentimes that's running stops and you expect the market to reverse from there. It's something that occurs all the time, but here's a good example of it. That's it for today, though. I will see you in the trading room bright and early tomorrow morning. Don't forget, we've also launched now the London session trading room. It starts at 3 a.m. Eastern. It runs until 8 a.m. Eastern. Trading with Gary. Gary's great trader. We're really happy to have him on board and part of the Basecamp trading team here. But that's it for today. I will see you all in the next one. Don't forget to like and subscribe. And until next time, everybody, happy trading.